We discussed this 2 days back that the data on the rollovers would probably be of a lot more prominence. And yesterday, post the expiry, when we analyzed the data, there was a very positive sign which was emerging for many of the fresh large cap name stocks where there was dearth of short, there was a dearth of short built up into many of the larger cap names in terms of the open interest built up, and I think that was a positive sign, and that's why you're seeing the rally being a lot more fluid today, and more short covering happening for many of these names. So many of these large cap stocks. I think it's been a full packed large cap across the board sector rally for the indices today. We've seen the metal stocks doing quite well. Private sector banking names were the ones which led up first, and then the confidence grew back into the PSU banking names. And then you have the infra stocks, the likes of L&T, etc., also doing quite well. And now the other large cap names are also looking attractive. Reliance, etc., are making a comeback after the 2-day, 3-day of 100-point correction for the stock. So net, I think it's been a completely strong market reaction this time around, and I'm expecting this momentum to continue. What the Nifty has also done is now we are on the verge of breaking out of that 1,000-point consolidation or a range which we started off in the month of December and January start. So we corrected from 22,100 to 21,100, 200. We are on the verge of breaking past about those levels, which means we could be looking at least another 800 to 1,000 point rally on the Nifty pretty soon.
Okay, so that's a take coming in as far as the markets are concerned. Let's welcome Vaishali also on the show to talk to us about what's happening. Suven Pharma is up 8%, Juniper Hotels is up. You also have some other sectors and segments like CG Power, Happy Forgings, also doing well in the trading session, while the hospital stocks, the likes of Medanta, Max Healthcare, Jupiter Lifeline continue to be in the red. From the hospital space, Vaishali, is there any name that you would use this dip as a buying opportunity on chart looks strong?
Hi, very good afternoon. Actually, hospital sector on the whole is doing very well. In fact, in the cash category, I was just some time back, we had recommended Rainbow Children Hospital, and along with that, even Max Health. So we are focusing along with the frontline Apollo Hospital, these two stocks that we are following, and I think they are having a positive view.
The take coming in on some of the hospital names, although Apollo, after that slamming that it got yesterday, has seen a decent bit of recovery. It's a negligible dip, what you're staring on the stock price right now. But news just coming in, and disturbing one at that. It seems that there's an explosion that's taken place at one of the popular eateries in Bengaluru called Rameshwaram Cafe. The cause of the blast is not known yet, but several people, as we understand, have been injured, and more details are awaited on the same. Okay, continue back with the markets, considering it's really metals all the way and L&T which is leading the chart. The interesting stock to bring up right now would be also Reliance Industries. Look at that spike that has happened on Reliance Industries in just the last few odd minutes or so. It's on its way to now touch the 3,000 rupee per share print for the first time indeed. Kunal, quite a decent move on Reliance, 2.5% higher.
Yeah, so 2.5% higher. The stock has retraced. So 2 days back, the stock had fallen 120 point correction on a single day, and that was one of the major reasons why the Nifty and the Bank Nifty and most of the other indices, they had gone through a sudden sharp correction. So I think this could probably now negate the negativity which was built into the stock price. Stock breaking past about the 3,000 mark is also one of the key triggers which is weighted for Reliance Industries. I would now believe that we could now be looking at post 3,000 levels. If we sustain about those levels, then we could now be looking at 3,100 to 150 as the next set of target for Reliance.
Okay, point taken. So that's a view coming in on Reliance. But quickly before we slip into the break, Vaishali also wanted your view on L&T and Dr. Reddy's.
One of the most consistent stocks in the volatile market that we had witnessed a few days back. In fact, this is the stock which we have also recommended to our clients right from 33.50 levels. The stock today also opened with showing a lot of strength. And I think we are looking at a positional target of 3,800 to 4,000 from here on. So it's a positive view from our end. 3,200 acts as a crucial support. So it would be a buy now and also in dips for the target of 4,000.
Rupen Rajguru is joining us now from Julius Baer. Rupen, afternoon. Rupen, there's a furious rally and a very shallow and reluctant correction, which was perhaps triggered by the nudge from regulator regarding small cap, mid cap, but that was bought into. You guys manage some of the most affluent investors across the country. When you speak with them, what's the feedback you're getting? Are investors looking at dips to be bought into? Are they worried about valuations? What's the positioning on the affluent investor side?
Yeah, hi. Good afternoon, Ajay. Uh, so the overall mood of the investor definitely is upbeat, and India probably, I would say the stars are aligned. So be it on the macro side, micro side, or also on the liquidity side, we are clearly seeing positivity right now. Yes, these pockets, some pockets of the market clearly is showing visible signs of frothiness, and I think rightly so. The regulator has cautioned warning bells around those that segment of the market. But overall, from a next say 5 to 10 year perspective, and when I talk to a lot of our big, large family offices, they all are very much aligned on the India story, and any dips is something definitely that is getting bought into, and that's the mood as we speak.
You're making a very valid point. All of that is fine. Are you comfortable to deploy fresh money even in this kind of a market, or would you wait it out? Even it could be a longer wait for a nice, kind of deeper correction.
Yeah, it's a very pertinent question, and let me tell you, this question will be there irrespective of the market level. Let's assume if market were to correct 5% over next 10 days, I think this question will still remain, because post 5% correction, also the market will not get into that valuation which will look extremely attractive. From our perspective, yes, we are cognizant of the fact that the market has rallied significantly. So we are looking into those segments of the market wherein there is relative value. And what is happening is that over last 1 year, the B2G company has done the best, followed by B2B, and B2C has done the worst. And if you just flip around 3 years, 4 years back, it was exactly the reverse, wherein B2G was doing the worst and B2C was doing the best. So our endeavor is to identify those segments in the market wherein there is relative value. And to answer your question on allocations, if 100 rupees getting allocated on day one, we are allocating 33%. And over next 2 months, we intend to get fully deployed.
You know, Rupen, around similar lines is the question on the PSU rally as to when is it going to abate. A lot of people questioning the valuations, the growth that these, stocks or multiples that they are running at. What is your prognosis? For a longer term, would you say stay put? This rally is here to stay?
Yeah, hi, afternoon, Aisha. No, the PSUs have transformed from being an ugly duckling to darlings of the market, right? And if I were to just juxtapose or combine both PSUs and small and mid cap as a pact, and which has done exceedingly well. So why have they done exceedingly well? I would say there are 3 to 4 reasons that one might attribute. One is very strong government balance sheet, which is aiding order inflow plus timely payment for the PSUs. Two, I would say a strong liquidity in the system, which is helping essentially the small and mid cap stocks, because the capital raise has become relatively easy for them. At the same time, the banking system also has been quite okay for them to borrow. Third, I would say the overall activity what we are seeing. We have to be aware that it was extremely undervalued, say 3 years back, and now it is getting into fair value and probably now getting into overvalued zone. So I would say PSUs, but in particular, are cyclical business. So they all are witnessing a cyclical upturn. In fact, between 2003 and 2007, similar story played out, wherein the PSUs as a pack, the PE went up from 5 times to almost 20 to 23 times. This time around, from 7 times, it has gone up to 27 times. So to answer your question, at this juncture, we are not comfortable with the valuation, because now a lot of these are priced to perfection. But in a bull market, which has a lot of liquidity chasing some stocks, and some of the PSUs, I would caution that has an extremely low amount of free float and they are getting bid up extremely high. And I would definitely be cautious about such kind of PSUs which has a low free float. But at an aggregate level, probably some of the PSUs banks still have some legs to move around from here. But otherwise, I would be cautious on that segment.
And selective, that's how one has to be when you are looking at the PSU space. Thanks, Rupen, for making time and speaking with us today.